Hello everyone, this is Carbonomics. If your portfolio is anything like mine, you're currently getting destroyed by the broader market sell-off. It seems like every move that we make goes wrong. The second you buy into a stock that has already been dropping, thinking you might be near the bottom, it drops another 20%. Yeah, well, this is certainly discouraging. It definitely has been testing me as well. It's really important to not give up on investing. Many people, especially the newer investors that have started over the past few years, may give up on the stock market and never buy stocks again, or at least will wait far too long to start buying stocks. I'm hoping this does not happen to you. And additionally, it's easy to look at what's happening in the markets and say that it's time to short everything or start buying hundreds of put contracts, right? Now, it might not be a bad idea to do this. I might be buying some puts myself in the near future, but it is important to keep sentiment in mind. If a stock is deeply oversold, maybe wait to short. Remember that at any time, the Fed could potentially enter the market again and start quantitative easing if they feel like the market's going to collapse, right? Because everyone at the Fed and within the government has a little spine to go through a temporary setback, recession, to ensure that the economy remains healthy and, promote its longevity. The point of this video is that we, as retail investors, hold so much power over institutions, but most people don't realize it. We're the only ones who can buy microcaps, stocks that offer the best returns in the market, given you invest wisely. If you're buying nothing but small biotech companies with no approved drugs, you might be setting yourself up for failure there. But most importantly, we have the ability to hold stocks for a long period of time. We don't have redemptions on our institutional funds. We don't have to report our performance to shareholders every quarter. As the United States grows increasingly short-sighted, we have the ability to hold on to stocks for as long as we like. We can dollar cost average into the market as it continues to fall. This will be an incredible time to buy great companies on a discount. As long as the companies you buy have enough capital or cash flow to sustain themselves to reach the market's recovery, I could see us making some fortunes on the other side of this potential recession. Now, institutions are forced to sell. If a strategy does not immediately work for them, they end up being replaced, either by a new money manager or investors transferring their capital to a different fund. This is why there is such a low amount of funds in the commodity space. The previous bear markets in commodities lasted for well over a decade, and few funds would survive a downturn of this magnitude and length. During a bear market, there's leniency for bad analysis and momentum investing, but in bear markets, finance is cutthroat. Really, in summary, we really have no constraints. We're free to invest as we please for the most part, and for as long as we like. Warren Buffett was quoted saying that he thought he would easily make 50 to 100% returns a year if he was investing with small amounts of capital all over again. Now, this is because when he started, he used to invest in microcaps as well. So if you manage to hold on through the volatility and continue to buy on the way down, you'll be positioned well for the subsequent recovery that we'll likely see. And sentiment about ESG will return at the same time. Give it some time. But if you liked the video, please remember to like, comment, and subscribe. Thanks for listening.